guys, welcome. I'm Anna, and here we talk about stocks, investing, and making smarter decisions. In this video, and from now on, I'll be using the Financial Scope Screener. I find it really good, and I've partnered with them. So if you want to support me, please subscribe to the channel and check out the promo code in the description below this video. First off, Nvidia is basically sitting at the center of the entire AI boom. Demand for AI chips and data center infrastructure has exploded, and the company is benefiting massively from it. Revenue jumped more than 65% year over year, which is just huge for a company already this massive. And what's even crazier is the profitability. Net margins are above 55%, meaning Nvidia keeps an enormous chunk of every dollar it makes. That tells you they have serious pricing power and operational efficiency. Now, from a technical announcer's perspective, the chart looks extremely bullish. The stock is trading at a fresh 52-week high around $215, and it's comfortably above both the 50-day and 200-day moving averages. That's usually a strong sign that momentum is still firmly in the bull's control.
What's interesting is how clean the uptrend has been. Since the March 2025 lows near $108, the stock has basically been making higher highs and higher lows consistently. Over the last 2 years, Nvidia is up roughly 96%, which is just an incredible run.
Right now, there's not really any obvious resistance because the stock is trading near all-time highs, but at the same time, when a stock gets this extended, you always have to be aware of possible short-term pullbacks or profit-taking.
Let's get into the fundamentals. The company's operating margin is over 60%, net margin is 55.6%, and ROIC is nearly 63. Those are elite tier numbers.
Revenue over the last 5 years has compounded at almost 67% annually, which is honestly rare territory, even among top growth companies. And the balance sheet, basically fortress level. Debt to equity sits around 0.07, which is extremely low, and interest coverage is above 500x.
Now, valuation is where things get a little more interesting. On the surface, the trailing PE ratio around 48 looks expensive. But when you compare that to the company's projected growth, the forward PE drops closer to 28, and the PEG ratio is around 0.72, which actually suggests the stock may still be reasonably valued relative to how fast earnings are expected to grow.
That said, this is not a risk-free stock. One of the bigger concerns is customer concentration, since a handful of major tech companies make up a significant portion of revenue.
A huge driver behind all this growth is the data center business, which generated around $194 billion in fiscal 2026 alone. Management also sounded extremely confident during the latest earnings call, especially around demand for the new Blackwell AI architecture. They're seeing AI adoption expand across multiple industries, not just tech, and that's a big reason investors continue to stay bullish on the company. Since the beginning of the year, the semiconductor sector has recorded a 66% increase. At the same time, Nvidia has risen by only 18%. The stock is therefore lagging, even though it is the leading supplier and presents an opportunity. By comparison, AMD has surged by 109%. What is my position on Nvidia today? Honestly, the big question now is simple. Can Nvidia keep growing fast enough to justify the hype? Because so far, they absolutely have.
But if you're trading it short term, you definitely want to stay cautious around these overbought levels because after such a massive run, volatility can hit hard. Position sizing and risk management matter a lot here. Earnings per share $1.87 adjusted versus 1.76 estimated. Revenue $81.62 billion versus 78.86 billion estimated. Nvidia reported fiscal first quarter results. Nvidia beats on revenue and guidance, adds $80 billion to buyback plan. Here are the key numbers. CEO Jensen Huang said that agentic artificial intelligence has arrived and noted that the AI factory buildout is accelerating at extraordinary speed. Do your choice. I have made mine, adding Nvidia to my portfolio. I hope you enjoyed this first video. Whether you already use a screener or not, you definitely need the financial scope. What I love most about it is the multi-criteria tool. It makes finding the best opportunities in the market so much easier.
Try it free for 7 days and use the code in the description to get an extra 2 months added to the annual plan for just $99.
Don't forget to like, subscribe, and share the channel. It really helps support me and the channel's growth. Thanks so much for watching, and I'll see you in the next one. Bye!